All right.
Okay, and let's see here one sec. It's still preparing, but it looks like it's pushing through. All right, you guys can get started whenever you're ready. Good morning, everybody. Happy Monday.
Morning. Nikki, I'll let you take it away.
Awesome. Well, welcome everyone to your Monday market update. So we've had a lot of changes happening since Thursday, Friday of last week. So I don't know if you guys remember this, but about a month ago when ADP released their jobs report, they way overestimated the amount of job creations. And when the actual numbers came out, it was a lot less by like over 1 million jobs. And what happened in the market when that happened is interest rates actually dropped dramatically within 24 hours. Well, we got the jobs report for last week where the estimates were low and the actual report came in higher. So the exact opposite happened late last week. We lost 50 basis points in the market, which puts our interest rates now back into the mid to high sixes. So we saw a huge change there that was really predicated by that jobs report. Now, there's going to be some adjustment of those numbers back to more realistic numbers of the actual creation of jobs, which might help the market a little bit. But for right now, we are at that 6.5 to 7%. Also, the CPI numbers are coming out this week. So that is the Consumer Price Index numbers. What that does is it gives us a good reflection on where the inflation is. So what the inflation is saying is that if we can lower that inflation, that motivates the Fed to lower their interest rate, which helps the 10-year Treasury bond, which is what mortgage rates are tied to. So we're hoping for some positive numbers from the CPI this year, or this month, I should say this week. They're predicted to go down about 0.1%. And although that doesn't seem significant, when you think about the amount of inflation, any downward movement is going to be positive for the market. So there were a certain sector of clients that were looking to purchase over the last couple of weeks that got interest rates into the 5.875 or 5.625, all the way up to 6.5. Now we're seeing that same group of people be at about 6 3/8, all the way up to 7. So there is some significant change in the market. There will be other opportunities for those interest rates to come down, but for right now, we're just kind of trying to push on those numbers and see those interest rates improve yet again. We do feel like they're going to improve by the end of the year as predicted. This is just a little bump in what we're seeing as the market's volatility has been all year this year, except for the two times I was able to come on and say, look, we're not volatile this week. So it's just definite changes and more par for the course for the year. And as we get closer to the election, we're going to see more and more volatility. So just know that as your clients are looking for houses, have them contact their lender even on a weekly basis and say, okay, where are we at? Where are we at? Where are we at? Just so that they can have that information and those numbers in front of them. Um, so I also wanted to talk about conforming loan limits and the changes that come out in 2025. So I did a TikTok on this earlier last week, but I wanted to add some additional clarity for different types of loans so you guys can understand what happens year over year as the market changes. So every year, Fannie and Freddie analyze home prices, values of homes, where the market is going, and they give what's called a new conforming loan limit. In other words, this is the amount that Fannie and Freddie are able to lend to on a conforming loan. If we go above this mark, it is called a jumbo loan, and that I will explain what that means, contrary to what Fannie and Freddie are talking about. So with Fannie and Freddie this year, the conforming loan limit is 766,550. Next year, they have raised that conforming loan limit to 802,650. This is significant for people that are in larger markets or more high-priced markets to be able to follow those conforming loan guidelines. As opposed to having to go above that, conforming loan allows for higher debt to income ratios, more flexible underwriting guidelines, most of the time, or at least in this market, better interest rates. That's not always the case when compared to jumbo. And then also allows us to use different terms and different guidelines to help qualify people on a little bit more unique circumstances. When you go above that 802,650, you are in what's called the jumbo market. The jumbo market is basically me saying to a bank, hey, I need money from your own personal bank portfolio in order to lend to this client. Now, when I say to Fannie and Freddie, I need money from you, this is a huge group of securitized mortgage funds that are flooded down into the the banks or servicers that are then flooded down to you as the consumer. And I am the person that goes and says, okay, I need money from a Wells Fargo, from a Chase, from a Bank of America, from Mr. Cooper, whoever that servicer is, where from their mortgage pool, and it trickles down to you guys. So part of my job is to just say, okay, where can we get the best money is really what it comes down to when we talk about interest rates. When the jumbo market, I have to go directly to Chase, for example, and say, hey, I need some of your personal portfolio to lend on. Not the stuff that Fannie and Freddie allow you to lend on, but your personal portfolio that you have to lend that's based on deposits that they carry within their bank. So with that being said, you can imagine larger banks have a bigger pool of money, have better interest rates because they're doing this at a higher volume. So that's all that jumbo really means. It does come most of the time with more restrictive guidelines, lower debt to income ratios, reserve requirements, and reserves are just you have to have 12 months of mortgage payment in a bank account or a savings account or some sort of asset account that is going to support you lending, let's say, $1 million. So needless to say, they don't just hand out this money like, like no big deal. It's you definitely have to have some more qualifying things. So with that being said, when Fannie and Freddie change their conforming loan limit, FHA also changes theirs. FHA is always going to be 65% of the conventional conforming loan limit. So in this case, for 2025, it's going to be 521,722. Okay. Now, that doesn't mean that you can't buy an $800,000 home on an FHA mortgage. It just means that max mortgage amount is going to be that 521,722. VA has no limit. VA is only limited by the amount that the lender, i.e. me, is willing to lend off of their line of, credit. Okay. So for example, I can lend up to $10 million to somebody on a VA loan, and it's the same interest rate as if I was lending $50,000. So there is no jumbo VA market anymore. That went away 2-3 years ago, so that the VA makes it more able to lend more money without having to screw with the interest rates or the qualifying for that matter. The big key on the VA loan, the reason that they're able to lend so much is because they have what's called a residual income requirement. So they don't necessarily have a debt to income requirement. They have a residual income requirement. And what that means is depending on the area of the home that you're purchasing, for example, in the Midwest, and depending on your family size, each month you have to have X amount of dollars left over after all of the things are taken into consideration, your mortgage, items reporting to credit report, child care costs, something, those types of things. You have to have a certain residual income amount because that residual income amount can be high depending on your family size and where you're lending. That is why they don't put a limit on the amount that you can lend because they have that backup residual income guideline. So that's for VA loans. Now, we already talked about jumbo loans. So kind of just as we move into 2025, and as home prices increase, interest rates are going to come down, home prices are going to increase. Going to be important for a lot of those buyers to understand where they're at as far as lending goes and what the options are. So just something for you guys to keep in mind. The last thing I want to tell you is that I actually got my new website up and running. It's kevnickmortgage.com. And it is a new website. It's got links to my application. It's got information about my social media posts. It's got blogs. It's got all these different things that you guys can go and check out and just be able to navigate through. And also send your clients there if they want to check myself out as, who I am, what my team looks like, how I lend, what states I'm licensed in, things of that nature. So it's very informational stuff as well. So if you want to check that out, it's again, kevnickmortgage.com.
That's fantastic. Thank you so much. And congratulations. I know that websites, they can be a lot of work. So
It is.
yeah, yeah. So
I
I
still got
encourage,
a couple of kinks to work out, but at least it's live now. So
and yeah, and it will always be fluid and changing. So
yes.
no, I love that. So yes, go and check Nikki's site out for sure. I can't wait to go myself. First and foremost, what questions are there out there? Because I know, Cari, you're watching the live stream. If you see any there, there's a good number of people on the call. Anyone want to come off mute and ask Nikki a question directly about what she said today, or maybe something that's come up over the last week or this weekend?
Muted. Even if it's just a question about your business that a lender can answer, don't be shy.
Yeah.
Yeah, I just got off the phone with somebody that's looking to get a pre-approval.
Okay.
And they asking me when I refer them to lenders, they asking me if they do the home stretch.
Oh, yeah.
So,
So home stretch is actually an educational certificate that you can get for first-time home buyers. Home stretch, it is a program that's put out there by Freddie Mac that is just basically an online training course or an online education course for home purchasing. It is required when someone is getting down payment assistance. It's also required when somebody is using a income-based program. And what the income-based program is, the term of it is called either a home possible or a home ready mortgage. It basically means that their income is at or under the 80% of the adjusted median income or area median income for where they are lending. So to give you an example, Minneapolis and surrounding area, if that client makes under $99,920 a year, they qualify for what's called a home ready or a home possible mortgage. What it does is it gives them a better interest rate, usually by about a quarter to 3/8, and gives them lower mortgage insurance costs and gives them the opportunity to get 3% down without hurting the interest rate.
Hmm.
If they make above 99,000, they can still get 3% down. It's just the interest rate increases. So it's a good program, a huge program that we use all the time. But yes, when that person is using that program or using down payment assistance, they are required to do an education, which would be that home stretch, is one of the options.
so they have to pay for that class, or is it?
There are some free options out there that I can give to any client that needs a link to the free options. If they take that class before they find a house, that certificate is good for 1 year before they have to retake it. So usually what I do is pre-approve the client, tell them they need to take this course if they're going to be buying in the year. Otherwise, I wait until they get that accepted purchase agreement and then have them take the course because it really doesn't take that long. It's an 8-hour course, but most people can get it done in about 3 or 4.
Okay, this client is looking next year about around May. Is there any way you can just like send me this stuff so that I can try to give it to them and connect you guys?
Yep.
Thank you.
Yep, I'll send over the link to it.
Are you back or you still
I'm
on
still
the?
in Arizona. Yeah.
Oh, okay.
Yeah. Yep. So, but yeah,
Thank you.
I mean, that's a good program for a lot of people. That brings up a good point with like, really checking area median income because not only is that going to influence how much they can purchase, but it's going to influence how we qualify the borrower. One example would be, let's say a borrower has two jobs, one full-time and one part-time. If we just use their full-time job, they can qualify for the loan, and they're under that 99. But if we add in both jobs, they're over that 99. If we can still qualify them on that one job, we are allowed to use only that income for that home ready or home possible program.
That's good to know. I did not know that.
Mhm.
Awesome.
Yeah.
Any other
And
questions? Oh,
yeah, I'm sorry, guys. I have another question today. Somebody asked me, am I a dual agent? And to me, I'm thinking about when you represent both sides. But they were saying, oh no, are you able to show any house or are you are you limited to which homes you show? Like, no, I can show any home in Minnesota. So I just got me off guard. I didn't know what they were asking. I thought it was just the representation side.
yeah, as far as I'm concerned or no, and someone correct me, when you sign the buyer rep agreement with the buyer, they agree to dual agency and that you can show them all homes and homes that are listed from and by other EXP agents. So, yeah, that would be on the buyer side up to them.
Okay.
Yep.
Okay. Thank you.
Yes. Good. Any other questions? All right. Well, we have a couple of minutes, so I just wanted to talk real quick about something. I was on a coaching call this morning, and two things come up I wanted to share here. First and foremost, when you are, well, no lead left behind. So right now, as we're going into this fourth quarter and doing a sprint towards the end of the year, I encourage you to go back and go through past leads. Maybe people you've met at open houses, or clients that said they're waiting until next spring. Don't wait until next spring to check in with them. Continue to check in with them and stay in front of them. So just that came up. And then the other thing that came up that I think is so very important is when we are talking, make sure that you're talking in terms that will hit your prospect or the customer kind of in an emotional way versus your mind, just logical way. So for example, one of the women on the call is focusing on probate. And I said, what would it look like if you were talking to someone? Like someone's like, oh, how's real estate doing? What are you doing? Oh, well, I'm working with, people that are going through probate. Like, what does that even mean to some person or individual outside of the industry? So I encouraged her to, find someone to run this by, or an accountability partner, or look in the mirror and say it as many times as you can. But what would that look like if you were to say, I help families when they're going through the transition of losing a loved one and what to do with the real estate or their home? So just think about how you're talking out there and how you're representing what you do and how you serve people. Because if you're using these terms that we're just used to, because we've been in the industry, some of us for well over 20 years, just think about what you're saying and how you're saying it, and how you can say it in a different way, because people make moves and they make purchases and they work with you not because of what you say, but because of how you make them feel. So you have to connect with them on that emotional level. And I know that's just something that came up this morning that I wanted to highlight here today. Anybody have any experience with that or any questions?
I know when I say I do mortgage, people look at me like, oh.
Yeah. Yeah.
Yeah. So I just say I always help families with their financing options as it relates to homes and purchasing and refinancing.
Yeah.
Yeah, I mean it's simple and short and to the point, but yeah,
Yeah.
I tend to say the word mortgage, or people tend to say the word realtor, and
Mhm.
it doesn't have, depending on who the person is, the connotation can be different.
Mhm.
But yeah, it's definitely helps to not always say mortgage.
Yeah. Well, it's so true. And even like your avatar, one of the women on the call does short-term and mid-term Airbnbs. So I'm like,
Mhm.
what would it look like if you worked with couples who've invested in property and, I'm going to save the Airbnb, or I'm going to do a, example would be that she runs numbers on the Airbnb and fix that without you having to break up your marriage, or, play on something like that, how couples can kind of become combative or whatnot. When you try to do that sometimes, especially couples that are just doing this for the first time, running into a lot of people, that's causing conflict. So I not only save your marriage, but I save your Airbnb too, or something like that. Just have fun with it, and really just think about who you're serving and get very, very specific. And real quick, one other thing I said is when I was talking with my coach on the coaching side of things, she's like, so who's your client? And man or woman? And I said, woman. And she's like, what age? I said, well, 35 to 50. She goes, no, what age? And I'm like, oh, 43. And she's like, okay, is she married or single? I said, married. She goes, how many kids? Three, and I was just like, whatever came to my mind. And she said, you want to get that specific, because when you're writing either, materials that you're going to mail out, or you're doing a social media post, if you're going too broad, like I'm a realtor or I help people with mortgages, it's not going to land anywhere. So you really need to get specific about who your very specific client is, knowing that others will come in. But if you could draw up the perfect client that you want to work with time after time after time, who is that? And then you write and you speak to them. And that way, when you're asking someone, or someone's just, like, what do you do? You can say, I work with this person. And Like then what will happen is someone will actually come on the screen of their mind. Because if you're like, oh, I sell real estate, they're like, oh, cool. And they move on. But I help women who are going through a divorce secure their own home for them and their family. Oh, I have a friend actually that you should talk to. Can you see the difference? It's very, very not even subtle. It's very big. And it's a proven tactic. And if you just try it, you'll see the light bulb moments and the people thinking because now they're searching their mind for someone, or you've said something that they spark that's their best friend or their sister's best friend or a friend of the family or a coworker that's going through that situation that they're going to want to introduce you to. So it's just a definitely different way of no lead left behind and look at your avatar, especially when you're explaining what you do and doing any type of social media or marketing.
Love it. Yeah, people get scared to go really specific because they think they're going to not be able to service everybody, but that's actually not true. You'll still service everybody, but you are separating yourself from the masses when you become very specific. And that's the key because there are so many realtors, there's so much social media, there's so much in everyone's minds that if we don't get specific enough, we're not able to click in their mind for them to remember us. And so I've seen people who have just picked one specific niche in their business and just really went deep in the marketing of that, and their business overall grows. That happens almost every single time. It's very rare that you would pigeonhole yourself into something. It's just that you're showing that you really have an expertise that people need and want. So have fun with it, play with that. I agree. Like, there's lots of ways with people that work with investors, getting specific, like helping other professionals who have money at their disposal, who want to be able to be set up for retirement. But they don't know how to begin. So it's like, if this is the field you came from, go back to the field you came from and go show those people how to invest in real estate, or couples who want to be able to, build wealth together, for an example. If that's what you and your spouse have done, then teach other spouses to do it. And just by getting specific like that will help you to find more of those people, but you'll attract a lot of people in the way of that as well. So great message from Angie. Great information today, Nikki. Continue to take this information and do something with it. It's live streamed in EXP Family Tree. If you want to rewatch it, you can go to Angie Gerber's YouTube to rewatch it. If you need to pick out a couple talking points, go do something with that, make a post, do a video, send a couple text messages, reach out to people. This is a contact sport, you guys. The more people you talk to, the better. So good luck. Let us know if you need anything. We'll see you Wednesday at 1 Eastern and Thursday at 11:30 Eastern. If you guys want to join either of those calls, we'll be here. Thanks, guys.
All right. Thank you. Bye.
Thank you.